Happy Friday, guys. The Discord is absolutely popping off. People have flooded in, and it's been a really exciting time to connect with all of you guys there in that space. Thank you, thank you, thank you. If you don't know what the Discord is, it is my new platform for connecting and sharing more technicals and more trade alerts with all of you guys. You can find it at going to stockswithjosh.com. I'll leave a link in the top pinned comment. Well, this week we've had a number of predictions that have been made for the last couple months finally come to pass. One, we've seen NVIDIA hit my high target of 140, and it then capitulated, pulling all the way back down beneath 128. But it's been fighting to stay alive at 128. And I'm going to be giving you guys commentary on the S&P 500, a swing trade stock. I'm going to share my game plan with you guys on a new play here coming up. And we're going to give you a brief thought on Bitcoin and crypto going into this weekend. But here's the big picture view I want you guys to start right off with. The markets, even though we've had a little pullback, we touched a brand new lofty all-time high and we simply retreated from it. But it doesn't mean that the bulls are just going to hand the entire market over to the bears and say, well, thank you for letting us run. No, there's going to be a full-fledged war between the bulls and the bears are going to have to bring everything they've got, all the FUD that they can possibly produce to get the bulls to give up right now. So don't go bearish too soon. It's not time to load up on the SQQQ. We don't have even printed a single sell signal on any of the Magnificent Seven or the SPY. And so there is definitely room for us to continue to test that upward range. And just so you understand, let me tell you something that technicals do. Technicals are fairly predictable. The market doesn't often just shoot up and then go straight down without any major catalyst, which we do not have. The only reason why we retreated from these prices is simply because they were everybody's target. Goldman Sachs had said 5,500 on the S&P 500. I told you guys just at the beginning of this week, they gave a new target of 5,600. So they were telling everybody before their 5,500 target even got hit, they were saying, guys, when we hit that target, we're pushing the goalpost a little further down. Why did they say that? Because they knew the markets were not just going to hit 5,500 and crash. Because there's no crash catalyst. There's nothing that would really cause the markets to do that. Now, all we saw was what's called early profit taking, which means that we can continue to go back and test those ranges. Now, we might print some sell signals. We might. We've got to wait until next week to see. And I'm going to go through some past SPY behavior with you guys. I'm switching from the SPX to the SPY today. Don't ask me why. I just started looking at that chart and I marked it all up, and that's the one I'm going to share. But we're going to go back to the last time in 2021 when we hit an all-time high, and we're going to look at the characteristics, and I'm going to give you a couple outcomes as to what the next couple weeks might look like. Now, I don't have the crystal ball. Nancy won't share it, but you understand that when I'm giving you guys these scenarios, there's scenarios for you to watch out for. So if you're in some active trades and you think that the market's going down, but the stock market begins to act more like the scenarios that I'm giving you, well, then it allows you to take caution. It's meant to give an alternative opinion to the markets. I'll lay that out here for you guys. This is the Stocks with Josh show. Thank you again for joining me. Thank you for already hitting the like. I know that hundreds of you guys do that the minute the video launches. I appreciate all of you guys. If you're new to this page, I am dropping predictions on stock and crypto and the market overall, and I think we're doing a pretty good job of it, and we have one of the best communities. There is so much help that this community gives from person to person. I love seeing it in the Discord. So many people are fired up to be part of a wealth building community, and we definitely have one of the very best ones. Stocks with Josh Discord. I want you guys to check it out. Hit that like and subscribe to start your participation in that community. Okay, guys, let's just start off with what's going on with this SPY. I always say that we've got to stick to the disciplines, right? The first discipline is to trade the trend. And on that point, like I said, the trend is still bullish. So we are still taking positions to the upside until the market prints a sell signal. Hasn't happened yet on a higher time frame. We're still operating on a buy signal from May 31st. Now, admittedly, we're clearly at the top of the range, which means we need to start looking at candles and candle formation patterns to see what the next clue might be. But as far as risk go, those who are buying into this market right now and going long, which means the next 6 to 12 months, there's more risk for them than for those who are taking profit and imagining that here in the next month the market will begin to pull back. So keep that risk scenario in mind as you make your personal investments. Now, right now, the big barrier ahead of us, which I do think we're going to test, is 551.50 on the SPY. That's where we're going to have to come back and hit it and see if we can press through that price point. If we do, then we're going up to 572 on the SPY. That's where the range, that's where the next fib range breaks out to. Now, today we actually went down a little bit, but on significantly decreased volume. So what does that mean? Well, there's always three things you want to look at when you're charting. You want to look at the trend, that's depicted by the price. You want to look at the strength, that's depicted by the volume. And then you want to look at the momentum, and that tells you how many buyers there are over sellers or how many sellers there are over buyers, and that is about momentum. So right now we're talking about the strength, which is the volume, and on the down move, it went down with 28% less strength than usual, which meant that the market was taking profits, but not under high conviction. So if we're looking at some very simple technicals like the Bollinger Bands, if we're going to come back to the middle, right now we're up at the top, if we're going to come back to the middle, the risk is that we would come back there and bounce, and that price point is 537. But I'm not calling for that. I'm just explaining that if we do have a bigger corrective moment, that's where we might come back to before going higher from here. So just put that on your charts. 537 matters. Now let me just share the chart with you guys. Okay guys, I want to make a couple points with you, and I've got two bears, and you're like, why is there a bear at the top of the chart and why at the bottom? Well, normally we put a bear at the bottom and we put a rocket ship at the top, but I'm going to tell you guys that I do think that the market has gone up enough that we would expect some form of a larger correction. And so I do expect that to happen, which means that if we get up into the 560 zone, I'm going to consider that at the moment my max bullish scenario for the year, which means that I would be thinking that there would be harder profit taking there than there has been at 550. So that's where I would be even more cautious, and that's why I put a bear at the top of the range this time. Now, we obviously came up to 550. The candle that we've got right now is not a very big high volume candle, which means that it's not terribly significant to imply that the market is falling apart. We've got a little bitty candle, and we might get another little bitty candle pushing us a little bit higher next week. So the trend is still bullish, but we look for 537. Now, if 537 breaks, then I would suggest that we're going to face a heavier sell-off. I actually don't see that right now. I actually believe that we have the opportunity for more of a 2-month window of continued distribution. And why? Because like I said a moment ago, what's the sell catalyst? Just because the markets are high? No, the market doesn't work that way. The market needs a catalyst to go down right now. And the fact is we just kind of went through earnings, and the most of the earnings were not bad at all. And so in reality, even if we get a little bit of consolidation, the markets are actually still optimistic. But we do have to consider that at some point soon, we're going to get at least a 10 to 12% sell-off. Now let's go, and that would bring us back largely to this 494 range before we would have any kind of significant bounce. Not calling for that right now. But let's go back in time and look at 2021 and see how the market reacted when it made a similar move like we've just gotten this last week. So here we are looking at 2021, and this is kind of possibly where we're at, this spot right here. We've gotten back and we've made an all-time high, and the market might go sideways and digest that, pushing a little bit higher. We could have in this scenario a 4% correction and these huge price swings that look like distribution, and another push up over the course of 2 months that would get us up to that 560 on the SPY, and then we could have what looks like a pretty strong sell-off. 4 weeks of selling pressure, pulling back a total of 12%. That's what happened the last time that we got to where we're at right now, and then we entered into, obviously, distribution, and we had a pretty rough 2012. We're going to hold off on making that kind of prediction right now. Right now, we're just kind of looking at this zone and what to expect right now. Let's go back and take a look at that. So again, we really just don't have the candles that show that we've gone through a proper distribution cycle before we can make any kind of decline. And I just don't see the selling pressure today that would suggest that next week we're starting 4 weeks of a 12% downturn. I'm not seeing that just yet, but we'll assess it again on Monday. Let's get to a real quick peek of Bitcoin. I want you guys to see that chart before we go into the weekend. Okay, guys, I'm going to make a very simple point on Bitcoin right now. And it's so important that you guys take these little lessons that I give you on charting because they'll make a world of difference in helping you make smarter decisions on taking profit and making good entries into your buys. We're going to be talking about candles. Understanding the simplicity of these candles can be such a huge factor in making profit. Guys, I want to point out something here. All of these candles, right? First of all, this entire pattern was a bullish pattern, and these descending channels break to the upside. Now we're into a smaller descending channel, and I'm absolutely expecting it to break to the upside, but that's not what we're going over right now. What you see over here, right, on the downturn is a bunch of tails. 1, 2, 3, 4, 5. We had all these tails where the price plummeted or dropped about $3,000-$4,000 in a week because each of these candles represents a week. And in the same week, it recovered. Now let's go take a look at the candles we've got right here, guys. Here, we don't have any candles with tails. So what does that tell you? That move from 64 down to 60 and then quickly recover, that's going to tell the buyers of Bitcoin that it's ready to go higher from there. And so I wanted you guys to see there's no tails right now. And that's a little bit bearish to me because I'm not seeing that we've hit that capitulation moment where it's going to signal the buyers to come in and start buying it back up to a higher level. So watch for a tail, watch for that price to dip down to 60 and be bought back up to 64 over the course of a handful of days. That's going to be a good signal. At the moment, no tails means that we've got a tail of capitulation coming. Now I'm going to go over a swing trade for you guys on an inexpensive $6 stock, and it's one that a lot of you probably already own and you know a lot about it, but it's time to take a look at it with fresh eyes, at least eyes from Stocks with Josh. We're going to put some money eyes on it today, and that's SOFI. I'm going to do a little bit of an overview on SOFI. We're going to talk technicals, and I'm going to tell you why this stock has fallen down so much. Is it a good buy? Am I buying it? What do I think of its prospects over the next couple years? Is it a good investment? We're going to deep dive it today. And of course, as you know, when you follow this page, price equals truth on SWJ. That's why we get some of these calls right, because we believe the charts. So we're going to get into what the charts say about SOFI. So let's just talk about it. You guys know what SOFI is. This is basically a banking app. A lot of young people are on board with it because it makes sense. It's got an easy to use interface. People can do their banking online and not have to go into a branch. Everybody, it sucks going into a branch. Nobody wants to wait in line. Brick and mortar sucks, is why all the brick and mortar stocks are down right now, because the online business is absolutely taking over. And SOFI is the banking version of it. It's traditional finance meeting fintech innovation solutions, and they've been doing really, really well. But we got to consider the valuation. Is the stock a good investment at this price? Just because it's $6 doesn't mean anything, because just like the US dollar, they can print as many of these shares as they like. This could be getting into dilution. It could have a ton of trouble financially, fiscally, and fundamentally. I don't think it does, but doesn't matter that the price of the stock is cheap. It doesn't mean that it's a good stock for you guys to buy. Now, this thing has gone down 46% since July of 2023. It's been on a very bad run. A lot of people had been buying into it, and their average price is much higher than the current price. And in that note, there is some bad news for you guys, because as we came under $7, people kept coming to me, Josh, what's going on with SOFI? And I told them, D-Day, the line in the sand, $6.20. This is what I refer to as historical critical support, and those support lines, they got to be respected, they got to be trusted, and I do respect the support lines. And if we break and close beneath $6.20, and I don't care if it's just a little bit, I don't care if it's just 10 cents, if we lose that $6.20 line on the daily candle and we close underneath it, you can count it as good as a $5 stock. So why did this thing fall? Well, at the last quarter's earnings, the management gave basically bad forward guidance. And it was not what the analysts were expecting. The analysts wanted strong, increasing guidance from the CEO, and they just didn't get it. And so Wall Street has been punishing them. And, there's reasons to take concern because a lot of value has been priced into this stock before the value of the company's been proven over time through profits and the increasing of revenue and the increasing of profit margins. And in particular, if we were to go by the intrinsic fair value of SOFI right now, which was established by Peter Lynch's theory, which I'm not saying it necessarily applies. Some people would say, Josh, it just doesn't apply to growth stocks. But if we were to go by it, the stock price should be negative 84 cents, which means that there's not a lot of intrinsic value in this company right now. And even more, this would mean that the stock had ahead of it a decline of 113%, meaning that the stock price would just drive right into the hole and SOFI should die, according to Peter Lynch. Now, do I believe that? Absolutely not. But I think it's important to use these metrics of judgment to consider, why did the analysts punish them when they didn't give great forward guidance? It's because the analysts view this as a growth stock, and that's what's attributing to its share price right now. So we need to see them growing, and we need the CEO to tell us that they're going to continue to grow at the rate that has been ascribed to them. And what rate is that? Well, I see them as having the opportunity to have revenue growth of 20% year over year for the next 5 years. That's why there's a very thin line for these guys. They've got to get over it. They've got to get over it technically, and they've got to stay positive and let the market know that everything is good. So why did they give bad forward guidance? Well, I think it's because they were actually being frugal and responsible and conservative, which I kind of like about this management team. So if you look at their business overall, one of their biggest profit centers is traditional loans, and these guys just don't like giving out any money. So they only will offer a loan to somebody if they've got a 740 credit score and are making over $160,000 annually. That's not a lot of Americans. And so the fact is, their portfolio of lending, which makes up their risk profile, is actually pretty darn strong. But let's talk about why the CEO came out and was conservative. Because the fact is, we don't know what could happen with this market. There's a ton of Americans in debt, and we could have a big financial crisis ahead of us. I personally don't see that because I think that the American government has no problem with printing money, bailing out the banks, and keeping everything rolling. Matter of fact, I've talked about it many times. There's always a hand on the lever to print more money in this country. And so I don't think that we're going to see that deeper economic crisis that so many have feared. And I think that their lending practices are pretty strong. Matter of fact, even though they gave that bad forward guidance, they recently came out and actually gave higher than expected optimistic guidance. But in particular at the time, analysts were expecting them to do 590 million, and they came out and said we might only do 560 million. Well, after a couple weeks have gone by, things are going pretty well so far in 2024. They've since come out and said not only are we going to do that 590 million, but we actually think we could do 595 million. So I think once they saw their own share value begin to decrease, they started looking more carefully at what the opportunity was, and they came out and said, we were wrong, guys. We're actually doing pretty good. We're even doing better than you thought. Well, Q2 earnings is when that's all going to get flushed out. But here's something that's important for you to understand. This is the way the market works. We're either testing the highs or we're testing the lows. And right now we're testing the lows. So just scrap everything you heard about opportunity and understand that Wall Street pushing the stock price down to get it retail to capitulate, give up all their shares, then they're going to buy it back again, and then they're going to go long and test the top of the range, giving this stock the benefit of the doubt as we move closer to Q2 earnings. Guys, that's what I see happening, and that's why I'm going to take risk position in SOFI, increase my risk position in SOFI. And I actually do think we're going to break that $6.20 range, and I think that means we're going to drive down between 580 and 530. I've got this on a daily buy, and I'm going to lump sum buy if we get down to $5.30. This is the new smaller trade, the smaller dollar trade for you guys that are just looking to swing a stock. I think we can swing SOFI from 580 to 530 back up to $8 between now and SOFI's next earnings. Now, here's another reason why I like this company. I probably won't sell my shares if we get back to $8 because ultimately I view this as a $16 stock in the next 3 years, which I think is a pretty good opportunity. If we got up to 16, I might consider selling. So a good company that I don't think is going away, that I don't think that the price is going down because there's fear of them going bankrupt or bad management. None of that's the case with SOFI. This is the opportunity to get a good company, a good growth company, when it's getting beaten down, knowing that that is just the trend at the moment. It's the downtrend. I'm going to accumulate it. And here's what you need to understand. If you are a retail trader and you bought a ton of SOFI when it was up higher and you're not able or willing to buy any right now when it's down low, then you know that you did it all wrong. Guys, I've said this before. You either use a stop loss or you control your position size. And if you have a controlled position size, you need to be able to buy as much as you own at a higher price. You need to be able to buy double that when it gets down to a low price, and you gotta use the charts. Guys, that's what we're doing on this channel. I'm here to help you with it. In the Stocks with Josh Discord, I'm getting ready to release my first micro class. These are gonna be just 60 seconds. I'm gonna take information on charting, candles, the whole breadth of analysis, and I'm gonna give you these 60-second punches of information that are gonna be super easy to digest. It's part of the micro classes section, guys. I'm so excited to release the first one, and we're gonna continue to release these so you guys can continue to grow, and there'll be a point of conversation. Not to mention the video that I did yesterday with Mark, Tribal Trades. It absolutely blew up. People loved it. They've been fighting the battle with the hamster, guys, and that's another thing you can come find over at the Discord, where Mark's helping people, answering questions and walking them through it. A lot of people have jumped on board to see what money they could make. And on that point, of course, there's no guarantee. We don't know how it's going to play out, but these are the types of things you want to be doing in crypto to take advantage of the money flow that exists in crypto. And I'll tell you guys for a fact, when the payday comes, we're going to assess what was made. We're going to come back, bring Mark on the show, and we're going to give you guys a complete account. It was the opportunity to just spend some time and make $25,000. All of that's also available in the Discord, guys. We're talking about it over there. Appreciate you today. Hope you guys have a wonderful weekend. See you over in the Discord. Appreciate all of you guys. Peace and blessings. Hit that like and subscribe and join this community. Talk to you later. Bye-bye.